Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So do our normal agenda today, market update, followed by earnings trades, those updates, and then Joe has some analysis we'll go through. So let's get started. Okay, overall indices, SPX, NDX, Russell, all still state one. Russell did hold one, which is a good sign. I don't know why these numbers came up around. So green pie 68% last week, down to 60 about as of yesterday. And then our state ones have held the overbought right above 45 right now. So let's take a look at the market pulse here. So this is all states. So pull it in a little. So that's state ones, we got up around 51, had a little dip below 45 and then kind of right above 45. Seems like the eights have kind of plateaued a little bit here past few days, right around 23%. Same thing with the twos. So something obviously happened here. You can see, market pretty much has signaled a turnaround just by looking at the eights leveling, the twos dropping, and the ones holding, kind of pulling back up a little. Nothing much with sevens or fives, and nothing with the fours. So really it's those three states right now. We could look for, if this thing's gonna start turning pretty good, I'd look for sevens, start pulling up in those eights, going into seven. So that's where we're at there. A nice spike there of highs, 397. That was on Monday. So it kind of continues here. Since this last low in October, it's pretty much the lows have gone away and we're getting high spikes. So that's obviously very bullish overall. So we had a time like that before, kind of flipped a little, and then now we're kind of back. And these highs are even stronger than what we had back here in the summer. So that looks good. This SMA pretty much mirroring the market and market pulse. Bullish bear, so we had quite a big drop, 84 all the way down to 58, and it seems like it's trying to level here, maybe turn back around. So I just kind of watch the state transitions, and those pop up here every day. You can get the counts of what's going to where, and just kind of look, see if those sevens start popping. That'd be obviously bullish, and some of those twos coming back to one. That's kind of where the majority of things are. Some of the fives could go to 1, 2, but really it's, these eights going to 7, and, these 5 and 2 going up to 1s would signal a stronger, run to come. So let's pull up SPX. So we've been in here a while, more than the average move. So, T3 met. So, it's talking about this level holding. If we go back here, there's quite a battle over weeks at that T3. This looks like a breakout, which means this could really run from here. Obviously, the top of the range we're at right now is 5,000 up here, and that's the bottom. So, this is definitely indicating we could have a good run here. Just based off of turning basically the T3 from resistance like into support up here, and as long as this maintains support, we could easily run up, to the higher end of this range. That's about it there. Gonna pull it out. Not too far. Not to 46 to show. That's a 46 there. So I haven't really even, top end is up here. So didn't really even retest 46, since this breakout, we had kind of dips down here, but the modeling all held, obviously, that's our state one entry. This kind of the T3 range up in here. So never really retested 46. So I think as long as we hold that above that T3, things could continue higher. That's kind of where we're at. Current range 5,000 to 4,600. That one's quick. Now the Russell. So this one is held state one. I figured, like down in here, especially if we had like a down day, another down day, I was figuring to go to 2, but we bounced back up above that stop loss. So, this is next level of resistance, entry price, 22.8951. So this is the current level of resistance, and that's top end. So if we get through there, we could make run up into top end of that range. I think the key here so far is 19 is held, had a good bounce off of that. So we're right up back kind of mid-range. But, this 1900, I think we only had, a few minutes below that and just kind of bounced real strong off that. So you see the low was 1894. That was just intraday and, tested 19 the next day. And since then, it's been kind of up and away. So still range wise, looking at, the 19 to 21. So let's pull up the chart. So hopefully we've broken this, but hopefully. All right. Gotta move this thing out of the way. That's a 19. Obviously, we got 17 down here, and then 21 is up yonder. So just looking at previous occurrences. So every time they've pretty much, down here. So this one, this 19 test, kind of back and forth, never really had a bounce off 19 like this, like a very strong. But this one kind of retested here, this one down, retested. So, this could indicate this could be the end of this range down here, 1917. Hopefully, obviously 19's got a hold, but it's looking different than previous attempts. So I think as long as conditions, we get some transitions, could try and make a run at top end of the range. That range is 2100 to 1900. So if we pull back chart, and the last time we got up 2100 back here, March 2022. And that was I think that was a Fed day. We had up and then down. That was a Fed day. Definitely look at it. So it's been a long time since we hit that 21. That was a Fed day. So This kind of popped in my head. We have a Fed day next week. Could we this thing likes to do a lot of repeating. So I'm just saying, could we hit 2100? Is possible. We have a nice run up into Fed day, but it's just kind of conjecture. But I think big picture said all eyes on the 19, and that really held. So it took off from there, and it looks good for time being. Unless something crazy happens, I think we're good going into the Fed meeting next week. So, speaking of Fed meeting, I just pulled it out. So January, nothing. Nothing can happen. March has trended towards nothing happening. So last week is about 50 for a cut, 53, and then 44. So now it's 40, almost 40, 60. So over the last month, that's changed a lot. You can see it was 75% chance of cut. So tempered expectations for market participants. We got May. That's our first cut. And that from a month ago, they were guessing two cuts, so now it's one cut. That's kind of my guess right now is first cut May, and we just walk it all the way out. So not a lot has changed here, but it's kind of moved up a little. You can see like 30, basically 30, 30 down here. So now it's 30, 30. So it's moved up pretty much a quarter point for that 30, 30. So, kind of right. This would be, what we at, 1 in 525. So this is $1.25, $1.50 cuts. So still a ton for this year, but so that's where Fed's at. Nothing much. Still think a lot of things, are kind of pointing towards March market wise. Reverse repo, that emergency facility for a bank bailout that don't, it's looking like, and then our run down to 7.5 trillion. That's all pretty much pointing till March. So, next week, obviously, the language is going to be key for the Fed. No expectation of what's going to happen. I mean, no expectations of cuts or anything, but it's all going to be language and forward expectations as usual. I think the only other thing, obviously watching that 10 years came up a little. So obviously spikes in this will be bad. Anything where we're running a lot higher, this range, I still think we're okay. Once we get in like over 4.5, I think it's going to be scaring the market. But kind of 4.25, 4. Obviously this isn't like 3.8, 3.75. I don't think that's going to happen near term. But 4 to 4.25 kind of looks range-ish, and I don't think that's hurtful for anything right now. Once we we start getting above 4.5, I'd expect the market to react pretty negatively. So, and that's all going to be driven by how much the auctions and what the expectations are for future inflation. So we'll have to keep an eye on the readings, and I think that's about it. I mean, it's looking pretty good right now. So I'll open it up to questions, comments overall.
This is Dave. I think the Russell's going to kind of flounder around until they actually do make a rate cut. That would be my guess on the Russell. So, not expecting one
Yep.
this week. So, I think that they're kind of like in the mid range now. They're going to be, I think, holding in that range that you've defined for another couple of months would be my guess. And the
Yeah.
SPX and the Nasdaq, I think, are going to be. My feeling is that they're again going to be kind of a concentrated few that are lifting the major indices, kind of like we had back in 21 ish.
Right. Yeah. I mean, a lot of the big names are driving the market. I think saw something with like Microsoft is now 3 trillion market cap. So it wasn't too long ago, like we were crossing 1 trillion for, a few of the names. So that's definitely gotten, driving growth in the, S&P and NASDAQ. But, I think the most rate sensitive indices is Russell, and you can just see how that reacts to, what's going on with the 10-year. So till that comes down, I wouldn't expect Russell to, have some huge run up, unless we have a huge run down in the 10-year.
Hey, Dave,
what was I going to say
I-
here?
I-
The semiconductors are staging a kind of a rally here without kind of a lot of fanfare. I mean, and that's excluding NVIDIA. I would say that the rest of the semiconductor, besides NVIDIA and AMD, the rest of the semiconductors are actually performing pretty well, which I consider kind of a leading indicator of, future year ahead health in the market kind of things.
Mm-hmm. Yeah. Go ahead, Joe.
No, I'm good, Josh. Thanks.
Okay. Well, I mean, we still got data all over the place. You got like these manufacturing indexes like in negative territory. It's just like the data is just all over the place. So it's definitely hard to read. Um, all eyes on the Fed really kind of my thought, and the 10-year, and lower rates are better for markets, and we'll see how long QT lasts when we start putting out a lot more bond auctions. So I think that's kind of like a March type thing. Well, thanks, Ed. Anyone else? Yeah. All right. Let's take a look at the earnings trades. All right. We had that non-mover Delta was disaster. So that one ended up costing us, max loss basically. So we had one good one, Delta max loss. So hopefully the rest are good. Usually we only have one or two max losses on the, so we'll see. We got one bullish runner, Goldman Sachs. That one's up, decent right now, 12%. So, we're always looking for 25%, but this one's looking good so far. And on the screen here, we have the position analysis. You can pull that up and go, day by day, see the profit loss overall for that. So, we have all these little buttons. All right, and then bullish pre-runners. So we got 4 active, I believe 3 have closed out. So right now we got AXP. So that earnings, those are the 25th. Same with Capital One. So those are right on the borderline. I think they're up today, some change. So this should be at, should be a little positive. I was tracking them earlier. Capital One, yeah, so they're today. So hopefully get a green closeout. Obviously not going to hit the MAC, our profit target. Then we got LNC, Lincoln National, and Exxon. So Exxon was close, but didn't hit 25. So
Exxon closed intraday yesterday.
yeah, it must be nice to know that I got this. I get one snapshot a day to do magic. So that's good. Thanks for letting me know, Sudhir. So this is our only loss right now. This what is Synchron whatever financial. So that's down about 100. This DR Horton, this one had terrible earnings yesterday. I don't know if you guys saw that. It was a big down day, but the pre-runner was good. Didn't quite, I'm sure it hit it intraday, but ended up being 24.79. And then Hilton hit profit target end today. So these are looking good so far. So
Yeah, that DH Horton review was sort of surprising to me too, because some of the other ones have done a pretty good job. So their niche must have been misfiring.
no, I think the big thing was the guidance, I know it's
Yes, that's true too. Yeah.
pretty decent drop there. So I'm down a little today, but yeah, they miss if they guide bad, I mean they're getting hammered. So, obviously Netflix had good and it's just hit or miss, it's definitely stock picker type market. So I was showing Joe this, yeah. Well, here's Microsoft real quick. You can look at 3 trillion market cap. It's crazy. And I was showing Joe as like, I don't know if you guys followed this, like back when I was an advisor, kind of watched some of the low price stocks. This thing used to be really cheap. Not back there, but like, all right, it went too far.
There you go.
Yeah, like 2016. This thing's like $2. Like 8 years ago. Like for a long time. It was this junk, right? I mean, that's financial crisis pretty much, got up $10 maybe, and just took off. It's a pretty crazy chart, from 2016. Anyway,
Here's an interesting anecdote in the AMD kind of stock. I used to be an IT guy back in my working days, right, for decades and decades. And AMD, it's the first came into play as a second source for Intel 8600 chips, right? And they were like behind Intel. Then you could say what a difference a CEO makes, because when Lisa Su took over, she sort of changed the direction on that, and that's kind of like what you see on the parabolic curve and the downturn because the analysts still treat AMD as a sort of a stepchild to Intel.
right.
So that's a good trading. It's a good trading underlying if you follow the news, in my opinion. So I traded a lot. It's been a good trade.
Well, I mean, Intel, it's been like a tale of,
Yeah, I mean they're good trades on the downside too. I mean some of these stocks are good to trade up and good to trade down. So
Mhm.
don't get me wrong. I don't always trade on the bullish side either. Yeah, most of my
Mhm.
Intel trades in the last year and a half have been to the downside, working pretty well.
Yeah.
Now I'm starting to trade Intel a little bit toward the upside since it's getting a lot more publicity from the whatever Reduction Act, IRA Act kind of thing that
Mhm.
they got some good money from.
Yeah. All right. Any questions on earnings or anything else for me, or Joe takes over? All right. You ready, Joe?
All right, Josh, give it a go here. Hi, everybody. Let's see. Couple things to talk about. A lot of numbers tomorrow, and as Josh said, the numbers have kind of been all over the place. One number I think might be worth paying attention to tomorrow is this core personal consumption expenditures. It's the advanced look. So, this is the Trading Economics website. They're looking for 1.7. Consensus is 2. But I think that will be interesting because, if you go back over the last, few years, that will be, basically a new low in terms of pricing. So that's tomorrow morning at 8:30. there are lots of numbers that we're going to be flooded with, but that's one that I want to keep my eyes on, just to get a sense that this whole inflation thing is indeed somewhat under control. As I said, lots of numbers. You got all kinds of GDP, both past numbers and then forward-looking numbers tomorrow. The advanced numbers, I think they're looking for somewhere in the neighborhood of, depending on whether we're talking growth rate or price, somewhere between 2 to 2.8%, on the upside. So, as I said, just lots of numbers. We got the jolts next Tuesday. That's always somewhat important. A lot of housing numbers. We're talking about the D.H. Horton housing numbers coming out tomorrow and Friday too. So, and as Josh said, some of these manufacturing numbers have just been, in the tank. So, but the market, continues to basically stay strong. So, from a timing perspective, I don't think we have any extremes at this point. What you do have though is, you got the SPX basically at its high, in the state one here in terms of its percentage move. Same thing with NDX. Both of these from a time perspective are, just a little bit above, the average move. So as I say, no extremes at all. It will be interesting to see whether, Russell, can pick up a little bit. The recent high, I think Josh was talking about in Russell, was that December 27th, 2071 high. I did go back and look at the all-time high in Russell, and that's just below 2,500, November of 21. I'll pull up that chart a little later, but no real extremes here. When you talk about leadership, NDX, well, it was actually XLK, as we've talked about over and over. It was the first to go into state one, NDX the following day. It got me thinking a little bit. So we're at 53 days. XLK NDX is 52. It's been a number of months since we talked about the extremes and length of time in terms of state one. So I'll go through that a little bit with NASDAQ and XLK. But SPX, as Josh pointed out, looks pretty strong. A lot of green. Sometimes we pull back to the top of that state 3 target, and maybe we got another leg coming. We shall see. I was fishing a little bit. We talked about these long-term trend lines. Maybe last week or the week before, and not a great line, but it's a bit of a long-term trend line, and that is up around that 5,000 level in the SPX that Josh was talking about. So, we'll see. NDX, just lots and lots of green for sure. When we talk about average moves, 7%, we're about double that now. But, maximum days in state one, is in this 145 range. Same thing for XLK. So I went back and let me just, we're just kind of off to the races here. Here's XLK, and again, way above state 3. It just, I shrunk, the longer term chart. I mean, it's just pretty staggering how few down days we've had. I mean, it's just, I don't know if it's a ridiculously strong market, but it is, certainly lots and lots of strength. And, whether that's earnings going to drive, Dave mentioned last week, we get the tech earnings, coming up next week. I'll get into some of them specifically in a second. But going back to, Sadir's whole pie thing, we had those consecutive days of increasing green pie, getting up into those mid 80 ranges, really does speak to the underlying strength of this market, and that's how it's playing out. Going back to maximum days in a state one, and I didn't do this on purpose, but I really do enjoy politics, as brutal as it is. And I was looking at the maximum days of XLK and some of the homework that we've done in the past. And, the longest periods that we were in state one in XLK goes back to, where are we? Yeah, 2016 and 2017. 140 days basically in 2016, and 145 days, the all-time high in 2017. I'm just sitting here thinking, what the hell was going on in 2016 and 17? Well, lo and behold, the presidential election. So got me thinking, wow, the election is not far off. And I think for me personally, last night, was the nail in the coffin for Haley. I think not to be able to get into single digits in that race with the way that whole primary is structured. I think going forward, it's going to be Trump-Biden. And how will the markets, play that, over the next 7 months? I think it's, as we get closer and closer, there's going to be more talk about it. I'll go back and do a little homework. We had a big low in the market, I think September of 20, right before the election. So anyway, I just found it very interesting going back to the longest period that we've been in state one and XLK was this 2016, 2017 period. And, to me, the catalyst for that was probably a lot of that was the presidential election. So that's just an editorial comment. Hope nobody was bothered by that, but just, something I wanted to mention. Nothing new really to talk about.
Joe, this is Dave. Before you leave, sorry for being so abusive when I interrupt, but I wanted to catch you before you left that screen. So nothing personal, my friend. But if you recall, one of Trump's first major, let's say, policy changes was to give corporations a big tax cut right around that time. Just saying. Right.
Exactly. And what I frequently in the past have pulled up, some of the Yardini earnings estimates, and he had that table that, went back 15 years. I think they've changed their whole structure. I've been trying to find that again because I really want to do, a little bit of homework with, earnings increases in the S&P versus runs in the market. And I'm having a tough time tracking down that source. But you're right, Dave. That was one of his first policy changes. And, lo and behold, we get the longest state one runs, that we've had in 15 years. So great point about that. Thanks for bringing it up. Any other comments on that, Dave?
What was the run on XLK in the 2020 election?
Here it was 78 days. We had two of them. And from May to September, we had a 96-day run in state one. And then right, the day of the election, November 6th through mid-March, we ran another 78 days in state one. So another, big run. I am talking XLK. I think NASDAQ was probably close behind.
That's interesting.
Yep.
I have no idea why those two would be correlated, the presidential election and XLK, but it is what it is.
Yeah. Same here. I'm just trying to, read through the tea leaves a little bit with our leadership and then backing into things a little bit. And XLK, it's, two of them, it's Microsoft and one other are damn near 50% of the index, and then everything else is below 6%.
The XLK's got to be mostly these magnificent seven. You have Apple, Microsoft, Nvidia, Google.
Yes.
Yeah, that's got to be the majority of XLK.
Yeah, but it is two of them that are in the 20s, and then it drops off dramatically. And I'll clarify that, next week. But speaking, so really, yeah, nothing to add in Russell here, but I'm not going to say certainly it's smooth sailing. You get above 2071, but it was 2460 back in November of 21. That was the all-time high in the Russell here. So I'm going to take some real market breath to get that going like that. One other thing about, I don't talk about it too often, but I do once in a while, that S&P oscillator that's out there. It's something that Kramer references every once in a while. I have access to it through a colleague who I've known, and that oscillator at this point is completely neutral. Basically the idea is +4, +5 is overbought, -4, -5 is oversold. That thing is +0.4 right now. I don't know how it's computed, but I do know that at extremes, it's pretty darn good. And it is dead neutral right now, just as an aside, suggesting to me that, we still got plenty of room to the upside. Dear, you mentioned the Magnificent Seven, and I got them all up today. I did want to just pull them all up because we've got, such strength in the markets. This is the leadership. And, I was frankly pretty blown away when I pulled them up today. Apple went into state one last night. I just had no idea. It's had a big run. Apple, candidly, has not been a great, state modeling stock, but, not bad, over the last year. And lo and behold, it went into state one last night. And on average, 42 days, average move, 18%. Well, if Apple moves anything like that over the next month and a half, where the heck's the market going to be? So, but that was awful interesting. And Dave, to your point, with the earnings coming up, Apple's February 1st. You're going to hear February 1st and January 30th as key earnings dates with, the Magnificent Seven coming up. So there's Apple. Long way to go for those targets, but we shall see. Amazon, has been performing very well. It's past its average days in terms of state one, but just another one of these Magnificent Seven doing awful well. I didn't draw that trend line above the tops, but that's actually quite a bit higher. Basically trading close to all-time highs. There's, Google doing the same. Let's see, Amazon earnings also February 1st, like Apple. Google's are the 30th of January. All-time highs here as well. At 1212, as Josh refers to frequently. Certainly that's been Google. Alphabet, whatever you want to call it. Here's, Microsoft, been on a tear, certainly, long time. Haven't done any, maximum days. Wow. 243 back in 2020. We're at 71 at this point, and obviously, nothing but strength here too. All these charts are kind of the same thing, but I just really wanted to pull them up so you could see, if you don't do it yourselves, in relation to the targets and where we are. That's really kind of why I wanted to pull them up. There's Facebook, Meta, again, earnings February 1st. So January 30th, February 1st, big earnings days. This thing been on a tear as well, above average days, above average move, but doesn't seem to be stopping anything. Here's NVIDIA. Be interesting to see whether target 3 turns out to be resistance. What a monster. The runs coming out October, these are, fairly historic. And last but not least, we got Tesla. And Tesla, be worth watching. The earnings are tonight after the close. So, in a bearish state, I guess we did reach target 1. So I did just, because a lot of people follow it, it's a big trader. I dug into the numbers, and Tesla is looking for 74 cents, in earnings on basically 25.5 billion. That is down. 74 cents is down from $1.19 a year ago, and the revenues a year ago were lower than what they are now. Last year, the revenues were just over 24 billion on $1.19. This year, again, they're looking for 74 cents on about 25.5 billion. Year over year, I think earnings, they're looking to have them down about 22%. I guess if they make 74 cents, that'll add up to 315 for the year, which is down 22%. Revenues, though, are up almost 20%. So margin shrinkage in Tesla is, I think has been publicized pretty well. Be interesting to see how they come in, and then, the market reaction. So that's the Magnificent Seven. I will try to do, some homework next week, a little bit more on maybe some of the presidential cycles and the moves before. That's it. Any comments or questions? Otherwise, Josh, back to you.
All right, anyone else before we wrap it up? All right, we'll wrap it up. Do it again next week. Thank you all for tuning in.
Have a good week.
Thank you.
Thanks, Josh.